Hello friends, how are you? Hope you are doing well. So today we'll start one more case study about greenhouse gas emissions inventory report. So today we'll take example of this Meridian group. We'll go through with the report for the inventory period of 1st July 23 to 30th June 24. Okay, inventory scope is the all facilities of this group. So whatever is covered in the organizational boundaries, we will see that. But this can be a very interesting example for all the students and learners for ESG and sustainability, that how the GHG inventory report is being prepared, what data is collected and covered according to the defined standard. Standard also we will see in the report. So let us start the discussion. Okay. Now this report is prepared by, the details are available here. Who is approver of the report, reviewed by head of sustainability, approved by chief financial officer, and other details are also available here. Okay, the disclaimer part. Then this is very interesting from the learning perspective, what is covered in the content side, the table of content about this report. We'll see different topics, more than 21 topics are there. So introduction about the report, statement of intent, like what we have seen in the earlier case study. Okay, description of the Meridian, about the company, person responsible for reporting period. Okay, the data covered from so and so period to so and so period. Organizational boundaries, information management procedure, operational boundaries, summary of source emissions, GHG emission sources, exclusions also specifically, data collection and quantification, and uncertainty impact also we will be discussing. Then we will talk about the base year selected and the changes to historic base year, why it was changed, justification for that, GHG emission calculation and the result, most interesting part, and GHG removal and reduction program, assessment of performance against the relevant benchmark, so benchmarking studies also, GHG offsets, description of additional indicators and liabilities about GHG stocks held, and the audit part of GHG inventory report. Then in the appendices you see 1, 2, 3 where the Meridian group treatment of emissions, group structure, reporting index for ISO 140641. Okay, that is also available. Independent assurance report to the board director of the company actually. So this is interesting. Okay, independent assurance report also. So let us proceed further. This is the inventory summary as per ISO 140641 9.3.2 F. The inventory summary prepared here. You see the business activity, then the scope 1, 2, 3 covered here. Okay, in the business activity, operational side, energy purchased and sold, and one-time construction, these are the activities, and then emission in tons CO2 equivalents. Okay, and the offsets, these are the information, and residual tons of CO2 equivalents, it's covered here actually. Okay, so total group value chain emissions, scope 1, 2, 3 all given here in total. Okay, so we can see this information, but this part is very important where you see the asterisks. Okay, first one is emission of our retail electricity using the market based methodology. So they are working on market based methodology of report. In New Zealand we use the annual netting of methodology actually. So please remember MBM concept, market based methodology. Offsets include credit cancelled by suppliers against their own emissions, and using the gold standards for voluntary emission reductions. So this is called GSVER. Okay, voluntary emission reductions for the balance. Then next is total emissions are calculated using market based methodology, MBM, as I said, for scope 2 emissions also, and this column is included to indicate that we have purchased offsets corresponding to the total emissions. So the company notes that offsetting emission does not mean those emissions are actually reduced. Okay, moving forward, then as per ISO 140641 9.3.1J and 9.3.2 EF clauses, we see greenhouse gas emission for the group by ISO category. Okay, so what are the categories of ISO here? See, in different ISO category like direct emissions, indirect emissions, and also you see stationary combustion. Further subcategorization is also there: stationary combustion, mobile combustion, and fugitive emissions. Okay, and also from the indirect emissions like imported energy for about the electricity consumptions, which is either location based or market based. Also, we see indirect emissions from transportation. Okay, transportation, production, distribution of fuel, contractor fuel, feed, business travel. Yeah, and indirect emissions from user products and services purchased. So there are different categories captured here: products and services sold from other sources, also like downstream leased assets and investments. Yeah. So this is very important: location-based emissions, which are calculated using the average emission intensity. So keep in mind, this is a very important subject. Location-based emissions, we have to focus on emission intensity of the grids on which energy consumption occurs. Also, market-based emissions are calculated using low carbon attributes of mechanisms such as contractual instruments or certification bundle with the consumed electricity. For example, this company uses 100% certified renewable energy. So we will see the details related to that. Also, we can see total indirect emissions, which are calculated using the market-based methodology for scope 2 emissions. Actually, scope 2 emissions. So we will see all the details here. Meanwhile, you can consider different categorizations as per ISO 14064. It's covered here. Other business activities like operational emissions, direct emissions, scope 1. Okay, greenhouse gas emission by business activity and scope. And then you see stationary combustion, mobile combustion, and fugitive emissions here. And then scope 2 emission, operational indirect emissions, where electricity consumption based on locations like facilities, offices, vehicles, and also electricity consumption, which is basically market based. Scope 2, we will see that. Okay, then we see information related to scope 3. Whatever the categories, you can see purchase goods and services, where IT, maintenance, office, professional services, fuel and energy related activities like production, distribution of fuel, T&D losses of office electricity, contractor fuel, basically meter reading, and contractor fuel for maintenance. Then upstream transportation, distribution, waste generated in operations, business travel, employee commuting, and downstream lease assets. So these are the selected scope 3 categories. The detail will see accordingly. Okay, then we come to the total operational emissions, scope 1, 2, 3, market base. This is, you can see, and also the energy purchased on sold indirect emissions. Sorry, scope 3. So the details are available. One-time construction indirect emissions also, the details you can see. Then totaling all based on market based and location based. So this is the calculation. Then total greenhouse gas emission by as per the greenhouse gas classification. You see scope 1 for scope 2 and scope 3. Mainly the gases: carbon dioxide, methane, nitrous oxide, hydrogen hydrofluorocarbons, and sulfur hexafluoride. We can see here. Yeah. So GHG emission in tons, carbon dioxide equivalents. See that whole information is available here for scope 1, scope 2, scope 3, and in total information also available. Yes, you can see this information. So let us start from the introduction side till we have seen the inventory of all the data, quantitative data for the GHG emissions. So in this report, basically the authenticity of the sustainability positioning of the company is dependent on credible climate action. which is including measuring, managing of emissions, and also reducing the greenhouse gas emissions into the operations. Yeah. So the company emission measurement and reduction guidelines support the environmental policy, and also the company's desire to align with the UN SDG for climate action, SDG number 30. Okay. Also, this report specifically is annual greenhouse gas report of the company, greenhouse gas inventory report, and this inventory is complete, accurate quantification of GHG emissions, basically directly attributed to organizational operations and within the declared boundaries. Okay, we'll see those declared boundaries. The reporting standard ISO 14064, you can see here. Yeah, ISO 14064. So reporting process emission classifications are consistent with international protocol and standard, and also report has been written in accordance with part 9.3.1 of the requirements of International Standard Organization ISO 14064. Okay, and also inventory has been prepared in accordance with GHG protocol. So corporate accounting and reporting standard 2004 GHG protocol, value chain scope 3 accounting standard 2011, that is also referred. Very interesting report. Okay, so there are two standard references. Yeah, Meridian has calculated its emission footprint since 2006. Keep in mind, this is very important. So since 2006 the company is calculating the emission footprint. Okay, yeah. So going forward, statement of intent, company's intent on demonstrating consistency with best practices in the accounting for GHG emissions actually, and this is relating specifically emissions of the whole group actually, Meridian group, and has been prepared following the requirements of 140641 and GHG protocol and scope 3 emissions. Okay, yeah. Description of the company or the group itself. You see, the company is generating approximately 30% of the country's electricity through 6 wind farms and 7 hydropower stations and commercial solar arrays actually. So 30% of New Zealand's electricity through 6 wind farms, 7 hydropower stations and commercial solar plants actually, or arrays. So Meridian sells this electricity to the customers through 2 brands in New Zealand, like Meridian and Power Shop actually. So this is about the organization. The parent group is Meridian Energy Limited, subsidiaries, okay, and investments they consider. They are taking a variety of activities in the energy sector, undertaking like professional services related to upkeep the dams, development of software by electricity retailer, captive self-insurance services also included in this. Yeah. So information related to the report, you see this, you can refer to Meridian Energy Limited integrated report for year 30th June 24, which is available also on the website of the company. Okay, so this can be a part of the report, annual integrated report. You can see 3.1 GHG policies, strategies and program. It is well defined here about talking about the environmental policy, environmental emission measurement and reduction guidelines. Yeah, and the role of Meridian executive team in the time year they defined June 2009. Also, there are certain guidelines how they measure and reduce the greenhouse gas emissions. Okay, then there is a target set. Half by 30 is a target within our business to reduce gross operational emissions, and in financial year 22 also we set the baseline to 21 actually, where Meridian Australia emission excluded actually, and also seeking was used in support of seeking verification that our target is SBTI as preferred by Science Based Target Initiative. So these are very key important informations about the report available here. Then who are the responsible persons? Very important, as per ISO 14064 requirement 9.3.1 B, you can see the roles and responsibilities ultimately lying with the board of directors. Then person responsible for inventory is CFO, Chief Financial Officer, and in addition to that, the key member of the team are like head of sustainability, consultant, carbon accountant, support manager, and sustainability lead also. This is the reporting period from 1st July 23 to 30th June 24. This is the reporting data. Organizational boundaries. We are seeing very important information here. Organizational boundary determine the parameter of reporting in the group inventory, and the boundaries were set and referenced with methodology described in ISO 14064 standard. So these boundaries covers operations owned or controlled by the group, Meridian Group, and its subsidiaries and associate company and joint ventures in the group actually. So applying the consolidated approach, you see here the information about the operational control consolidation, for the GHG emission group inventory actually. So in the table, appendix 1 sets out how each entity is treated, and appendix 2 contains a diagram of the corporate structure as till 30th June 24, and it's a part of, this report is a part of annual integrated report also. What is the meaning of facilities as per the report? Okay, derives activities and resulting emissions are categorized into facilities. Yes, Annex A says about ISO 140641, which requires that data should be retained in its disaggregated form with transparency and to provide maximum flexibility. Also, facility is an operation which, by nature of its processes and geography, can be separately accounted. Very important. Talking about the facilities definition, basically a single installation, set of installations, or production processes which can be defined within a single geographical boundary or organization. So this is the group as of 30th June 2024. So you can see the information about the group and subsidiaries. Then defining the individual facilities, Meridian company, then description of the legal entities, then the subsidiaries, and you see the legal entities associated with this. This is clearly stated, and information also about the company's details is given here. So I said the report has been wonderfully, drafted and prepared, and then information management procedures, how they manage the data related to GHG emissions as per ISO 14064 9.3.2. So you see how wonderfully mapping the ISO 14064. So in this report, you see GHG measurement reduction guidelines were developed and approved on 30 June 2009, and if you see this, last revised and approved in June 2022. And this document measurement and reporting requirements for individual facilities and group, and for each facility development maintained according to ISO 14064. The key information management procedures are like sourcing the data which is collected directly from third-party suppliers or from the Meridian financial system, and data is stored in some of the software database, and then emission factors and conversion factors maintained by the group and in the software itself. Inventory is compiled using activity data and emission factors, and the report is independently assured by the third-party organization here, Deloitte Limited, and the report is internally reviewed to identify opportunities to reduce emissions and improve the senior management are also informed of emission reduction progress. So progress tracking is also going on. So very nicely written about the information management procedure. Moving forward, what is the operational boundaries? So in operational boundaries, you see as per ISO 14064 9.3.1 E, Okay, emission sources from group's value chain were identified with reference to also the methodology described in the GHG protocol corporate and scope 3 value chain standard, and also as per the ISO 140641. So different categories are there, like direct indirect emissions categories as per the scope 1, scope 2, scope 3. Okay, the details are available here. In scope 2 also, location and market based, both the approaches were applied. Also total emissions are reported using the market based approach, so you can see this information. Scope 3 relevant categories were identified and the information is available here, whatever the suitable categories identified. Okay, then you see operational emissions. For clarity, the emission sources reported in operational emissions and construction emissions. Okay, so scope 1 to 3 emission related to day-to-day operations of the business. Yeah, and then construction emissions for major projects, you can see this information also. So emissions from energy purchased and non-sold to customers, scope 3 emission from fuel and energy related activities also covered here. Yeah, this is very important. Additionally, scope 3 standard categories are not reported because they are not relevant to the business, and with the exception of category 11, which is captured in the report of energy purchase and non-sold. So this we need to, exclusion part we need to understand and remember here. Very important. So ESG student and learner should learn about very carefully here. You see, the table is providing the emission sources including in the GHG inventory as per the scope. You see scope 1, 2, 3 and the emission category, stationary, mobile, or fugitive emission, then emission source, facilities included, data source, and methodology and assumptions. Right? For example, we see scope 1 stationary combustion, fuel used for electricity generation. The facility includes the company. No fossil fuel consumed. Here, this is very important. So there were no emissions from the gigawatt of the electricity generated in the reporting period. As of the fuel used to generate electricity was water and wind actually. Then testing of backup generators. So fuel deliveries to sites from this and this petroleum, and assumed fuel deliveries are equivalent to consumption each year. Then mobile combustion, again from car, travel, owned, leased and rented by the company. Boat, travel, all the facilities this. So again you can see from where the emission quantity was sourced, like GPS, odometer readings, fuel card purchases, rental providers, and all these details are available here. Similarly, for fugitive emission, maintenance records and all, we can see here records for storage cylinder weights and top-ups, and service provider who maintain the top-up units. For scope 2, electricity consumed in office, like records from billing system, and consumed by vehicles. So again GPS and meter, odometer reading, and fuel card purchase, and rental provider activity reports. For electricity consumed in facilities, you see electricity market reconciled consumption files. So accurate record of electricity consumed by facility, the details of scope 2. Then very interesting is scope 3, where most of the people are interested to learn in detail about what are the scope 3 categories selected and how the calculation was done. So basically the category, emission source, facilities included, data source, data supplier, engagement, and methodology and assumption. So we'll take one example here. Let's say purchase goods and services, category 1, goods and services provided not otherwise included in the category below. So all facilities were in the scope. So the data source, emission information provided by suppliers were available, were not available for dollars spent, used, we consider here. Okay, so this is very interesting part of the discussion where you see methodology and assumptions. So all the major suppliers spend more than $200,000 in a year contacted for information on portion of their footprint attributable to activity performed on behalf of the company actually. Okay, Meridian. generally like fuel use, electricity in office and travel, service types, IT, professional services, maintenance services, office services, commercial office space where no supplier. Okay, and then next is where no supplier information available. So we focused on dollars spent by service type multiplied with emissions factor sourced from things type. Okay, so in financial year 24 itself, 53% of purchased goods and service emission data has been provided from the supplier either directly via surveys undertaken so and so time. Data was provided from the supplier most recent reporting period where the data relates to a financial year different to period. So we can see for different scope 3 categories the relevant details are available for methodology adopted, okay, to collect the data, and from where we are collecting, what is the record or document we verified. So this is also available, very interestingly designed actually. Then other scope 3 categories also covered, so you can go through with these details. These are very interesting and they can help you to understand how the emission factor, emission source, emission categories, calculation, everything you can understand through these examples actually. So all the relevant scope 3 categories are covered here. Yeah, and even this is also interesting how how much level of engagement of the supplier for this particular activity and associated emissions. Yeah, you can see this. So about other emissions like PFCs and NF3, the company is declaring though no operations within the company use PFCs, perfluorocarbons and nitrogen trifluoride, therefore no holdings of PFCs are reported and no emissions for these sources including. So this is very important from reporting perspective. And other emissions like CO2 emission from the combustion of biomass, so there was no combustion of biomass in operations, so that also highlighted very carefully. So what are the source exclusions? This is very important. What are the sources not included in the report? You can see here emission sources below have been identified and excluded from the inventory actually. So the details are available, like you see scope 1 and 2 where fugitive emission, biogenic emissions, okay, these are not included. Difficult to obtain the data, estimate to be and difficult to obtain the data for this biogenic emission, so this is why they have not captured it. Okay, so exclusion part is written here. Then again similarly for purchase goods and services, like for contractors for different electricities and investments also was difficult to obtain, assumed to be minimum actually. So data collection and quantification. As earlier said, there is a software company using it for data collection and calculation methodology, right? It is written here, they call it Brave Gen CSR. This is the software used by the organization, okay. And also the emission factor for purchased goods and services have been sourced from things type air travel emission factor included, radiative forcing. So this is very detailed information available for data collection and quantification. Market based emission factor of electricity consumed, market based also defined very clearly. Also following the IPCC 5th assessment report here, so this information also captured. So those who are understanding the report, they can understand what are the audit criteria and audit checkpoints related to ISO 14064 also. Yeah, so they can learn a lot from this thorough analysis of this report basically. Yeah, then changes to approach used previously, what is the changes happened, it is also captured here, no material changes. Then very important, impact of uncertainty as per 9.3.1 PQ. So uncertainties associated with the GHG inventories can be broadly categorized into scientific uncertainty or estimation uncertainty. These are the two uncertainties they captured here. So scientific uncertainty arises when the science of actual emission process is not sufficiently understood, and also estimation uncertainty arises from any time GHG emissions are quantified actually. Then these are the details about the uncertainty, very important. And a quantitative analysis of top 20 sources of GHG emission using the protocol uncertainty measurement tool indicates aggregated uncertainty ranking is good actually of the company, good. And cumulated uncertainty is plus minus, we can say 9.7%, and 99% of emissions, sources account for around 99% for company's emissions. Yeah. Then what is the base year selection? We can say 14064 according to 9.3.1 K. Okay. So the base year was July 22, 30 June 21, and this provides most recent benchmark against our absolute target of halving our operational greenhouse gas emissions by 2030. So very detailed information you can see. The total restated group operational emission in the base year was this. Base year emissions were recalculated. This no source of spend based emission factor was applied actually. So there are certain changes related to base year. It is clearly defined here. So what is the changes to historic base year? So let's say they recalculate the base year if any of the following applied, like if emission factors change substantially and were relevant to prior years, and if we bought or sold a business, and also if we significantly changed the scope of what we were measuring in value chain actually. So the base year was updated from financial year 19 to 21, in 22 to account for the sale of Australian business. So this is the detail about why there is a change in the historic base year. Okay. And also GHG emission calculation and the results were highlighted here. You can see scope 1, scope 2, scope 3. Scope 1 3%, market based you can say, yeah, and then scope 3 is measured 97%. Okay, you got my point. And scope 2 is also given here. Total operational greenhouse gas emissions. So we see here emissions coming from the total emissions of scope 1 majorly. Yeah, you can see all the details, calculations are available here. Greenhouse gas emission scope by annual comparison also you can see from the very interestingly designed and prepared the report. So this is where also very key information disclosed to the stakeholders, like all data in the graph has been taken from GHG inventory reports which already were audited, and reasonable level of assurance, okay, was given over the assertions and quantification given. Okay, so this is also very important. Yeah, then financial year 24 received reasonable assurance for scope 1, 2 and limited assurance for scope 3. Then we have total operational emissions by facilities. Okay, this is also covered. So classification according to facilities. So now what is a program related to GHG removals and reductions? So these are the efforts and details about those efforts. Like greenhouse gas removal is defined as per ISO 14064. Total mass of greenhouse gas removed from the atmosphere over a specified period of time actually. So the company is progressing to plant around 1200 hectares of land in forest. Also aim to complete the plantation by spring 25. So these are the details. So trees will be a mix of natives and exotics. So the details related to the greenhouse gas removal. Also reduction initiatives, these are defined here, very interesting. Also they focus on SBTIs, okay, in line with SBTIs. The details you can see, very interesting. So what is the initiative and what is the progress by financial 24. Let's say agreement for electric ferry at this lake, work with an agriculture consultant to identify emission reduction options. So these details you can see here. What is the progress accordingly? Yes, they are focusing on EV, electric vehicle, SF6 roadmap implementation, supplier ESG, good energy program. So there are multiple initiatives accordingly. Construction emissions also calculated. So this is external consultant completed a LCA approach for wind farm operation, maintenance, building, substation, switchgear room, which identified key areas of saving of 20%, okay, equating to the ground level. And you see other details related to climate action plan, and even the half by 30 roadmap details you can see. Monthly, annual carbon impact reports, waste diversion targets. So these are the strategic indicators for the organization related to this report. Here emission reduction increases, reductions or increases, the data is available here, and there is a comparison from this and this 3 years comparison and base year also, right? So what are the deviations happening? This is also given here. Very interesting, wonderfully presented data. Okay, then we come to the assessment of performance against relevant benchmarks. You see the half by 30 ambitious. In line with this commitment, SBTi has approved Meridian near-term science-based emission reduction target. Okay, so very interesting. SBTi information also covered here or captured here. 100% renewable energy generator with no fossil fuel combustion of electricity generation. So the companies recognize that our biggest impact will come from continued investment in further new. So their emphasis is mainly on renewable energy generations. Yeah, and scaling customer decarbonization products also. You can see this information about GHG offsets. Okay, what they have done, what are the efforts, every information is available here for offsetting commitments actually. So the details are the details are available for offsets applied to like inventory. So what are the number of vendors cancelled, details about them, then gold standard VRs, total offsets. So these information you can see here. Certified emission reduction plan, gold standard VRs, NJETS, emission trading schemes. Those details also we can see here. Description of additional indicators like electricity generation in gigawatt, that comparison, financial year comparison is there, internal. Okay, and like HFC gas holding, SF6 holdings, all these information you can see here related to emissions. Okay, about the audit, you can see inventory report has been assured by the company called Deloitte Limited, a third-party independent assurance provider. So the reasonable level of assurance has been given over the assertion in quantity, like for scope 1 and 2 emission, and also the scope 1 and 2 reasonable assurance and limited assurance for scope 3. Okay, what is the company name, and in accordance to GRI standard they have done the audit and assurance. Very important, GRI standards they have utilized. So these are the details about appendix 1, Meridian group treatment of emissions, like company name, emission source, legal structure and partners, okay, and economic interest held by the group companies, and then country where the operations are happening, operational control, and some comments are there, we can see that. Then energy group structure, if you see the company, okay, details about the partners and subsidiary companies also, all informations are available here. And this is very interesting from learning perspective of ISO 14064. One, the different clauses are available and what are the sections of the report mapped against these clauses. So that information is available here. So if you see the reporting index from where we are starting 9.3.1a, and all the sections of the report has been mapped against them. Now this is the assurance statement or assurance report issued by the company, third party company Deloitte, and how they have done the assurance, like what is their report on GHG emission inventory, what is the director's responsibility, what is the audit and assurance company responsibility. So all the things captured here actually. And they also followed ISO 14064, the details. Yeah, reasonable assurance for scope 1 and 2 and limited assurance for scope 3 emission. This is covered here, right? So these are the details of the verification process, inherent limitation, scope 3 emission, and then independence and quality management of the company. That is also given here. What is the use of report, how it can be shared with the further stakeholders, and how this reasonable information or knowledge of GHG related activities. Yeah, so statements related to the reasonable assurance for scope 1 2 emissions and scope 3 emissions. So please read it carefully so that you can understand about audit and assurance summary also. So scope 1 2 emission included in the group inventory report of the year this have been prepared in all material respect in accordance with the ISO 14064. So they declared also. In the limited assurance, the company has performed, the audit company has performed, evidence we have obtained and nothing has come to the knowledge. Okay, so this is also given by the third party. So this is how we complete the review of this report. As an example, how we prepare the report according to ISO 14064. One, using GHG protocol. Okay, so these two important things you might have learned from here. What is the methodology adopted to do the calculation, from where the data has been sourced, and what are the reference documents we have checked. So this is the information available. I hope you learned a lot about the different sections of the report. Thank you very much, friends.